Good morning and welcome to the XM.com weekly market update. And joining me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Bit of activity on these markets at the moment with the Middle East, the US equity markets. But we touched on China last week after their stimulus was brought in by the government. But there's a few more charts here I thought would be worth looking at just to show, give a bigger picture of what's going on there. So obviously both CPI is sort of flattish, PPI is down, car prices are off significantly and food prices are down as well. So that stimulus can only go so far.
Yeah, though it's been well received when you think about what we've seen in Chinese equities, and they were shut yesterday. I think they open again today, but there was one of the indexes I noticed was up, I think 43% for the month.
Wow.
I've never seen that in my life.
No.
And the CSI was 8 and 9% up in a day. It's interesting to see their car prices and the huge investment, and I suppose from the competitive landscape, shipping all of those electric vehicles all over the world, the Chinese ones. Its price is absolutely falling off a cliff when you're looking at those numbers. That's enormous, isn't it?
Yeah, and there's a lot of talk, not only in the US about tariffs, but in Europe as well on those EVs as well. So I suppose you only need so many, but it's interesting with stimulus, it's a bit of a sugar hit really. So what they really need is reform, but what sort of reform do you get into a country like China?
Yeah,
probably not a lot.
No. Well, the government always wants control, so it's going to be very interesting if it was ever a free market.
For sure. Head over to the Eurozone. CPI is now below 2%, came in at 1.8%, so you would expect quite a few interest rate.
Absolutely, and I think that the momentum at the moment is going to be very much, November, yes, December, yes, so to lots of 25 and to the downside, so it's falling in the right direction, and there we are, there's the chart, what impact that naturally will have on euro and all the cross rates associated against it.
And I think you would think that it would come off a bit, but these interest rate cuts coming up would probably be already taken into consideration here, but it'd be interesting if that inflation falls considerably more, which can create other problems.
Well, yes, stagflation and so on, and it'll be interesting. Again, we're seeing numbers come out of the States this week as far as inflation. So whether the States is falling, oil prices are now really starting to ratchet up with the issues you've got in the Middle East. They're up 8 and 9%, and naturally that'll flow into the Bowser and then the cost of goods. So all interesting.
It is. We've had some big numbers out of the US, strong figures again. The services PMI came in just under 55, which was quite a bit higher
than what the market was expecting.
And,
exactly.
We've said it a lot. The resilience of the US economy and the US consumer is pretty extraordinary.
You've got another lot of ISMs coming out this week as well, non-manufacturing. But the breadth and strength of the economy, there it goes. It's a great number, and that leads us to over to you.
Yeah, well, that was a big number as well. The non-farm payrolls, solid number, 254, I think it was. They were expecting about 140 or
140. It shot to the upside, and not only that, but they also revised up August to 159,000. So that was a relatively good sign. And that leads you to the next question. And this is where it's compressed. You had a 50% probability of a 50 basis point rate cut on the 7th of November. This time last week, it's now crunched down to less than 9%. So everyone's saying you'll only be getting 25, and if the numbers are better than expected, do you only get 25 by here to the end of the year?
Well, it wouldn't surprise me. Like that's the irony of it, is that the economy is still strong. So, and it looks as though they do want to bring interest rates off a little bit, because they don't need to be as high as what they've been. They've been there for a long time now, so they've got room to move off. But you would think they don't need to be so aggressive in the cuts, which is probably a good thing, saying the economy is strong. But that might take the wind out of the equity markets a little bit, which probably happened a little bit overnight. The equity markets were off significantly last night, and I think that's partly on the back of what's happening in the Middle East as well, though.
Oh yeah, very much so. And you've got the storm heading into the worst, they say the worst storm in 100 years. That's a big call, considering you've had the likes of Katrina and you just had the Hurricane Helene up to North Carolina. That's devastating what it's done over there.
Sure has. And we've been watching oil, which has been pretty either stable for the last few months or actually coming off, but we've had a big spike in the last week.
Yep, huge, up 8-9%. So it's probably the best part of about 10 or 11% up now, because it's been bid up this morning in Asia trade. And what's fascinating, well, you got over nearly at $81 for W2 for Brent, $80.93 on the screen as we speak. So impact as far as Gaza and what's happening with Israel and the Middle East, and the talks as far as Iranian oil fields, do they get hit? And the next thing is US refineries and the shutdown there in the Gulf of Mexico.
Yes.
That can only be one thing for oil, and that'll be a war premium and a hurricane premium built into the price.
Yeah, so you would sort of think it would continue to rise, at least in the short term.
Yep.
So, but we'll keep an eye on that as well. And all the issues coming out of the Middle East at the moment, there doesn't seem to be any real resolution there at the moment.
No, none whatsoever. And again, that's going to be demonstrated in price of crude and war premiums, and as we speak, and the media is covering it well, and it's a non-stop 24-hour-a-day story.
Yeah. So it'll be interesting few weeks, and we about to hit earnings season again. So
yeah, when does the earnings season
I think
start?
it might in earnest next week, I think it is. So, but yeah, it's interesting every quarter. So they come around pretty quickly.
Pretty quick.
So it'll be interesting to see how they perform. You would sort of think there'd probably be some pretty reasonable numbers again if the employment's holding up and the PMI and GDP is holding up. So
yeah, I just had to check the date. Today's the 8th. It's Tuesday. 4 weeks today is the US election. That's quick.
Yeah.
Not 4 years.
No. And it's sort of interesting. There's a lot of other stuff going on. So there's a focus on the election, but from away from the US, you're hearing bits and pieces about it, but not a huge amount. I think because there's so much other stuff going on in the world.
Yes.
Where it's a little bit of a distraction, really. So good.
Well, we'll know more about it in 4 weeks' time because, I think that'll really ramp up. It normally does in the last month at showtime, and 4 weeks out. Yeah, and a lot of global themes are playing out simultaneously.
Sure. Well, we'll keep an eye on all that and catch up again next week.
Look forward to it.
Great. Thanks, Pete.
Cheers, Andrew.
And that's the xm.com weekly market update.